Sony earnings. Is the 40% profit jump mostly currency?
My view, the profit gain is real, but its quality is mixed.
What is the short answer for a US investor?
Strong margins, weak constant currency sales, and one big risk.
Start with Sony's first quarter filing.
Sales reached 2.838 trillion yen, up 8.2% by calculation.
And operating profit?
It rose from 340.0 to 476.5 billion yen, or 40.2%.
Wait, that sounds much stronger than sales.
Yes, profit growth was about 4.9 times sales growth.
Give me a cleaner profitability test.
Operating margin rose from 13.0% to 16.8%.
So the margin expanded 3.8 percentage points.
Correct. That is comparison 1, using matched Q1 periods.
Does that prove demand was booming?
In plain English, reported growth and demand can diverge.
Because the yen was weaker against the dollar?
Exactly. Sony averaged 159.3 yen per dollar this quarter.
Last year's average was 144.6, right?
In short, that translation gap flatters reported yen sales.
Show me Sony's own currency bridge.
Sony says reported sales rose 8%, but constant currency fell 1%.
So that is a 9-point growth gap.
Here's the key. That 9-point gap is the caution flag.
Which businesses carried the profit?
Image sensors and gaming delivered the largest gains.
How strong were image sensors?
Their margin rose from 13.3% to 23.8% by calculation.
That is a 10.5-point margin expansion.
Yes, better product mix helped, not only currency.
And the gaming margin?
It rose from 15.8% to 21.6%, a 5.8-point gain.
That is comparison 3. What is the catch?
Sony says US tariff refunds aided gaming profit.
Did Sony quantify the refund in this presentation?
No, we should not pretend the recurring amount is known.
What does that mean in plain English?
Put simply, some margin may be durable and some one-time.
Is there another durable growth signal?
Music streaming grew 10% in dollars. Publishing grew 8%.
Why show Sony's annual SEC filing record?
It establishes Sony's US disclosure and ADR context.
So the company reports directly into the US system.
Correct. The quarterly facts also sit in filed records.
And your ratios are separate calculations.
Exactly. The 9-point gap and margins are deterministic math.
Then the conclusion is your interpretation.
Yes, my view is cautious on the quality, not the headline.
What matters specifically to US investors?
Sony trades in New York and earns heavily in US dollars.
So a weak yen can lift the ADR story without more demand.
Yes, while gaming, music, and pictures linked to US spending.
What is the big risk you mentioned?
The July 28 Kumamoto earthquake hit a sensor facility.
Now show the newest capital return filing.
Sony spent 66.4 billion yen on shares during July.
How much of the full program is complete?
Cumulative spending was 193.9 billion of a 500 billion cap.
That is 38.8% of the maximum authorization.
Yes, July alone was about 34.2% of cumulative spending.
Does a buyback make the earnings quality cleaner?
That means it supports each share but cannot create demand.
So what is the strongest counterpoint to your caution?
However, sensor mix improved, gaming margin rose, and guidance rose.
How much did operating profit guidance rise?
Sony raised it 120 billion yen, from 1.60 to 1.72 trillion.
That is a 7.5% increase from the May forecast.
Correct, but the quake impact is not included yet.
Could the earthquake change the full year view?
Yes, the financial impact was still too uncertain to estimate.
What would make you less cautious?
If 2 quarters show positive constant currency sales, I'd revise.
Anything else?
Margin above 15% without material refund help would matter.
And what would break the bullish case?
A large quake cost or weaker sensor volumes would do it.
So does this settle Sony as this episode's stock to watch?
It earns that label for evidence, not as a recommendation.
Give me the final answer in one sentence.
Sony's profit is stronger, but currency masks softer demand.